The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. You ready for some volatility, folks? We got markets negative by 13 points, but boy, you take a look at the S&Ps, right, folks? We just had a bar 60 points on the Producers Price Index. We'll get into that. A little bit hotter than the market was looking for. You wake up this morning, you say, the market's a little bit red on that economic data, but boy, it's going to be an action-packed morning as usual. And yeah, tough to overstate in terms of that move. That's a 15-minute bar, but putting it on a 1 minute, it was instantaneous, the drop-off from about 39.90 in the S&Ps to 39.30. You get 30 of those points back to 39.60, and right now we're trading at 39.53. You're off by about 30% on the S&Ps. Again, to a 1 minute chart, NASDAQ 100 on the PPI number, 11,748. How about dropping 200 plus points to 11,500? NASDAQ 100 down about 1/3%. Folks, we just dropped 200 points. 200 and, what is it, to be exact? 11,517, 231 points. 231 points, man. You're talking about a 2% drop in an instant. Get some of that back. Right now, we're off about 1/3%. Dow, off about 1/4%. The Dow drops 400 points in a heartbeat. You talk about volatility, man. Russell, off by 8 this morning. Bitcoin, hanging well, man. 17,355 this morning. We're trading above 17,000. You got Ethereum at 1268. Crude, little volatility on that number as well. How about 71.87 for the price of crude? You got the gold contract. There's some volatility for you, man. From 18.19 down to 18.04. Gold up $7 on the session right now. And we jump to notes and bonds. We're getting a little bit of lower price and higher yield, folks. And boy, moves everywhere. Doesn't seem as dramatic because of the moves we've been seeing recently, but in more normal times, a drop of 20 points on the 10-year in a heartbeat. Pretty dramatic right there on that PPI number. We're talking about a 10-year yield right now. What are we pushing? Just above, back above, 3.5%, 3.51%. The yield, almost 3.52%, the yield on the 10-year. There's your action on the 30-year. We're trading right now negative by 8 ticks, and we jump over to the volatility index, the VIX. A little bit of a spike, all things considered, back to about 22 and change, where we were chopping around for most of yesterday with the VIX right now. Technically up about half a point at 22.78. All right, let's jump around to some of the currencies. Dollar index, there's some action for you. Dollar recoils, though. How about that, right? You see the action in the markets versus the action in the dollar. The dollar spikes above 105 just like that. We give up most of the move. I mean, you saw the other indices, right? We gave up barely most of the move. Dollar index almost gave it all back from where we spiked to. Again, these are 1 minute bars we're looking at just to illustrate the action we've had in the last 30 minutes since we got that PPI number. You're spiked to above 105. Dollar pulls back to 104.68. Right now, we're at 104.82 on the dollar index. And let's jump over to the dollar yen. Dollar yen right now, there's some action for you at 136.08. And let's just jump right into it. Wholesale prices rise 0.3% in November, more than expected. And how about the headline number in terms of a year ago? 7.4% from a year ago. I mean, we've just become numb to these numbers. Well, not numb, right? You see what the market did. But they're just so normal now in terms of 7, 8%, et cetera, et cetera. And we're kind of bumping into some pretty high comps on a year ago. Remember the whole rhetoric that we're going to be dealing with some pretty lofty comps. That will help the inflation debate. Not happening, folks. The PPI increased 0.3% for a month, 7.4% from a year ago. The market was looking for 0.2%, excluding food and energy. The core, up 0.4%. Not what you want to see, man. The market was looking for 0.2% there. Pay attention to core more than the headline numbers, because if you're worried about what the Fed's going to do, not necessarily worried, if you're just interested in what the Fed is going to do about the market, pay attention more to the core. Because when you listen to Chairman Powell speak, okay, he makes the case that the impact they have from the Federal Reserve rate, it has more of an impact on the core, which is why they break them down, okay? Food and energy, not as much of an impact for the Federal Reserve when they're raising rates or lowering rates. As a result, they're looking for the core numbers, what they're doing. They're especially watching that core PCE, okay? But nonetheless, this is core PPI, 0.4%. Folks, 0.4%, that's almost a 5% annualized number in the last 30 days. Yeah, and as they say, stocks fell sharply following that report. Not what you want to see, man. Third month in a row that the headline PPI number's at 0.3%. On an annual basis, the increase represents a decline from the 11.7% peak hit in March, okay? But folks, that's what I'm talking about. We were at 11.7% in March from the prior year, right? Well, we just got November numbers. We're going to be bumping up against those comps, and still the numbers are rising at 7+% on an annual basis. The increase came despite a 3.3% decline in the final demand for energy. There's the difference in core, right? That was offset by an identical 3.3% increase in food, energy, volatility in a big way. The trade index rose 0.7%, transportation and warehousing falling almost 1 full percent. Excluding food, energy, and trade services, that's like another category of its own. PPI was up 0.3% from a month ago, 0.3%, almost 5% on an annualized basis. Now, they say the lowest since April 2021. You could cherry pick that data if you want to. I would not advise that. Services inflation accelerated 0.4% after being up just 0.1%. How do we get out of this, man? You're just seeing pockets left and right. The moment we get one declining, boom, you got services going up on an annualized basis of 4.8%. in November. 1/3 of that gain came from financial service industry, where prices surged 11.3%. What? That was offset by a sharp decline in passenger transportation costs, which fell 5.6%. On the goods side, the index rose 0.1, a steep decline from 0.6. I mean, just look at the volatility. That's what strikes me most in all these numbers. The modest gain came despite a 38.1% acceleration in prices for fresh and dry vegetables. Did you see that? 38%. This is why people are like, what are you talking about 9%, man? I'm seeing 50% inflation on the goods that I'm buying, especially when you're talking about whether it's like chicken, eggs, right? Vegetables. Wasn't even aware that vegetables have a number that's 38% acceleration. Prices moved higher across multiple food categories, even as gas was trading lower. So we take it in stride. Market, not really taking it in stride. It's going to be a dicey one, folks, as we basically drop back to the lows that we've had this week, right? You start the week off Sunday at about almost 4,100. Last week, we closed it out at 4,085. We got the jobs number on Friday. It's been a one-way trip to negative prices. Yesterday, a slight reprieve, but guess what, man? I think we got some negative action in store this today. And folks, I talked about it on my program earlier in the week, okay? Just on a technical basis, and I'm talking a lot of fundamentals, okay? Very close to the 618 of where this market's beginning to roll over, okay? And if you're a pattern recognition analyst, trader, and you don't have to be a rocket scientist, folks, we got 3 thrusts to the downside, and each time we've caught a reprieve. You got 1 and up, 2 and up, 3 and up. What's the next series in that pattern, folks? Stay tuned. We'll be right back. The TFNN Holiday Tiger Dollar Sale is running this week only. We've doubled our normal bonuses, where you can now get up to a 40% bonus on your purchase, and all purchases also receive a TFNN Tiger Mug. Tiger Dollars are good for all TFNN newsletters, trading webinars, and services, so they're a great way to lock in added savings. Don't miss the TFNN Holiday Tiger Dollar Sale, which ends this Monday, December 12th. For all the details, visit the front page of TFNN.com today.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps right now negative by 14, red across the board in this market. And keep in mind, you're negative by 14, but boy, we were coming into that number in positive territory. We're off about, how many, 40? Yeah, about 40 points. We're off about 1% from where we were prior to that PPI number. So we'll see the volatility as we come into the opening bell in about 12 minutes from right now. We've got a great question in the YouTube Tigers Den. It says, Tommy, did today's news change the odds of the Fed lowering to 50 next week? And by lowering, the Fed, not really lowering, which is a remarkable thing, right? Because that's how you view things. It's lowering from 75, but the rate's still going up 50. Nonetheless, keep it in mind. No, really not putting an impact on things. I think we got right now about a 75% probability that it comes in at 50. You still got about a 25% probability that it comes in at 75. Pretty close to where we were, I think, prior to that number. What it does change, though, okay, is the implications that inflation is persistent and they're going to have to stay higher for longer. That would be my take on things, okay? I think that Chairman Powell, from the words he has, the message he has put out, okay, is that they're going to take the totality of the move. They're going to consider all of the moves they've had. They're going to look for the impact and the possible lag. They're going to let those rate hikes take effect. December may be the time to decelerate their hikes. But he said, man, number one, you might have to be higher than the market was thinking. Now, maybe that's going 50, 25, 25, 25, 25. Maybe that's going 50, 50, 25, 25, 25. Or maybe it's just going 50, 25, 25, 25 and leaving it there until they see a distinct rollover. Now, that might be tough, man, because if we get a pullback and we get recession, and the Fed says, no, we're not cutting yet because inflation's not under control, even though the market's reacting, even though earnings are in trouble for these companies, even though the multiples are pairing things dramatically, that is where my mind goes much quicker than if they're going to hike higher than the market was thinking. I mean, we're in a restrictive policy rate, folks, okay? Continuous claims, the highest level since February. The housing market, you can't deny what's happened in the housing market. So there is an impact. The impact is there. The Fed's going to want to try and give it time if they can. And, you know, they still got their foot on the pedal, man, at 50 basis points going up after 4 consecutive 75 basis point hikes. So I don't think that that's going to change the conversation for December. We find out In 5 days from right now, folks, we find out in terms of the Fed meeting Wednesday, December 14th, 2 o'clock. You get the press conference at 2:30. I would say he's going 50. There's nothing too dramatic in these numbers that's going to shift that conversation. But what is shifting is if these numbers persist, maybe they have to go another 50 before they go down to 25, right? If things are lining up, I don't imagine he's going to go from 50 to 0. As in, they're not going to keep rates there. I imagine they're going to put a 25 in between 50 and 0. Well, what if they have to go another 50? I don't think they're going back to 75. I just don't think it's happening. The rates are pretty high right now. And I imagine they're going to let that play out, try and give it time if they can. So that's how it goes. You got the odds at about 75 basis points in terms of the target rate, what they're looking for, and we'll see if that plays out. Pretty dramatic how we're going with this volatility, but we'll see where we go. And just to finish up that conversation in terms of, if you're a pattern recognition analyst, specialist, whatever you want to call it, folks, okay? You don't have to be a genius, folks, to see. Every time we've had a rally to this degree, we've seen a sell-off. There's nothing that's changed in this market. Yes, the Fed is going to decelerate things a bit. They're still hiking by 50. The message has still been we're going to be higher for longer. Very difficult to imagine that they're somehow cutting in the next 6 months. Are you kidding me? I don't think that's possible, man. I just don't think there's going to be enough data to solidify in the chairman's mind that inflation is under control. I don't know how you make that case, man. I can't make that case with the data we have right now. Maybe we see a complete reversal in the data in the next 6 months. But if that's what you're looking for, then anything's possible is kind of what you're looking for. Because, of course, anything's possible. Could inflation end tomorrow? Of course it could. Does the data say that's going to happen? I don't think so, man. And I pointed it out. On a Fibonacci basis, they've all been in the ballpark of about a 618, man. So there's the most recent one. You mark it up to the 618, right? The prior move, basically right around the 618, right? And I'm ballparking here, okay? I'm ballparking numbers. I'm looking at an area, call it a little bit of linear regression from the move we had. But the move from March down to the lows of June, what do? We rose to a 618, and then we sold off dramatically. I just showed you that acceleration we had from the October 13th lows, basically about a 618 of the move lower from August. And the original move, I think this one gets a little bit skewed. Yeah, a little bit skewed on this one, but if you look for a little bit of linear regression in terms of maybe taking an area, you did get above that 618, so that one doesn't match up as well. But as you can see, pretty much in the ballpark of a 618 in terms of a retracement of the prior move. And guess what, folks? These are big moves, man. The first move was about 600 points lower, as in the move lower from January into the first lows we saw in March, okay? The second move lower, was almost 1,000 points. Okay, so we got 600-point move lower, 1,000-point move lower, and then about a 700-point move lower. Well, folks, we're within about 100 points from where we were right there. So we get anything like that, man, and you're talking about a move. 600 points maybe takes you down to about 3,500. 700 points takes you down about 3,300, 34, anywhere in that realm. And I'm just going to bring it out a little bit bigger, okay? Because I love the 618s, folks. And if you're looking for a 618, where does it bring you? It brings you to about 3,200, man. And, if you got some powder dry and this market gets down to 3,200, I like it a lot better than when we're sitting at 3,950. Let's say that much. Okay, let's jump around to what else we got going on. Let's talk a little bit of big picture. And let's talk about China, man. So much for COVID zero. They're going to be dealing with some problems over in China, folks. It's going to be nothing like the world has seen so far, as they put it in this article. End of COVID zero threatens to overwhelm China with infections. They're just going to open up the entire country and take it all at once. I guess that's what you got to do when you lock it down for about 3 years. Rapidly giving up on the policies that suppress COVID. You got a couple million people, not outlandish that you might have a couple million deaths on a country that basically has zero natural immunity to COVID. Rapidly abandoning the mass testing, lockdowns, and centralized quarantine that define the stringent 3-year policy. I think you had a government official out there, right? Was it yesterday or a couple days ago saying basically that 80 or 90% of the country is going to get COVID? That would have been outlandish only a few weeks ago, right? You had this complete shift in terms of what's going on. And unlike, as Bloomberg puts it here, the whack-a-mole pattern of the outbreaks that took place in the U.S. and Europe, okay, over the months and years, China is likely to see a wave of infections engulf the country all at once in a population that until now has largely avoided exposure to the virus. I don't know how that's going to play out, man, but it's going to have an impact. That's for sure. Maybe that's part of the reason why you're seeing crude trading at prices that we haven't seen in a while. Yeah, you're going to paint a picture. So you got experts painting a picture of impending chaos with absenteeism paralyzing factories. This is where you see the iPhone, etc. It's not going to be contained to China in terms of the economic impact, okay? You're going to see hospitals out there getting overwhelmed. You're going to see residents hunkering down in their homes. You're going to see between 1 to 2 million people potentially die. It's going to be all over the country at the same time. It's going to start in urban areas. It's going to go rural. It's going to impact things, man. And boy, it's going to be an interesting one to see on an economic basis how that impacts things. Stay tuned, folks. We're coming back for the open.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you got the S&P down about 11 points. NASDAQ 100, you're down about 33. The Dow off about 60. We got a little bit of a lift of a couple points right now so far the open. We'll see where we trade throughout the day. Going to jump around to this article on Carvana, man. Now, this is a couple days old, I think. Yeah, when was this out? Wednesday night. But, boy, if you didn't check out the statistics, folks. Now, Carvana, my goodness, be careful of this equity. Probably going BK, okay? You don't get charts that look like that are well in the terms of financials. Absolutely remarkable that this stock can go from $3.76 to $4 in the span of a year. Not many would think that that was possible. You talk about getting overextended, okay? But just a quick lesson in diversification, man, because these founders, the father and the son, now the father cashed out, I think, like $3 billion in 2021, something like that. Yeah, he you're damn right he did, okay? I mean, check out this stock going back, folks, all right? You have a rise from $20, a 20 bagger, let alone you entered 2020 at 78 to 376. So they probably didn't think it was going down to 462. But the son, Garcia III, okay, now he's still at 119 million. His dad's worth a couple $1 billion, so they're going to be just fine, okay? But talk about a lesson in diversification, even at this type of wealth. Not many people would have thought that you got 7 billion down to 119, and let's be real, okay? They're still billionaires, okay, because of the father. But 119 million ain't 7 billion, man. You know, you reach a level of wealth, folks, that the opportunity cost of every dollar you're earning above that is basically, you know, the opportunity, it's zero. You know, as in you become worth 100 million. What's the difference between worth 100 million and 101 million? Very little, okay? As opposed to if you're worth $0 and 1 million, it changes absolutely everything to the nth degree. $6.7 billion is not 100 million, man. And it's remarkable that he just kept it all in the stock. It's worth 119 million. And guess what? That might disappear if it goes to zero. 98% of his wealth. The second largest percentage decline among those tracked. Well, wow. Who could have lost more than 98% of their wealth? Well, if you're running a Ponzi scheme, that's the only way to lose money quicker than Mr. Garcia III lost his wealth, Ernie Garcia III. I mean, it's just try and learn from that stuff, folks. You know, you think you got everything going. You're worth $7 billion. What are you doing keeping it all in a stock like Carvana? And they obviously had some idea. If you're running that company, you probably have a little bit of an idea that the market might be getting ahead of itself. The dad was selling. Why wasn't the son selling? I don't know. And yeah, as I can say, I mean, he lost 87 million bucks on Wednesday. He's only got 119 million left. Just a lesson, folks, okay? There's a lot of lessons you can learn through this. You got the the two biggest creditors out there coming together for a pact. Yeah, the largest creditors signed a deal to act together in a potential debt restructuring negotiations. They're already gearing up for bankruptcy, potentially, burning through cash. They're consulting with lawyers. Yeah, 98%. Yeah, and the father is worth 3.2 billion, down from 11.7. Not exactly a 98% drop. So just a lesson to be learned, man. Lots of lessons in this market. And, you know, 100 million is still generational wealth for probably more generations than you can ever count, okay? But it's not 7 billion, man. And it's a real difference, and it's remarkable that you have that happen. And stay away from this stock. Down another 7.3% today. Yeah, it was up yesterday, okay? But small percentages on small numbers can be deceiving, folks. And you're off another 7.5% today. All right, we're going to jump from that to other stocks that have had quite the demise recently, and we're going to jump to cannabis. Marijuana industry says sales slowdown after pandemic surge. And yeah, some of these equities, man, you talk about getting hammered right now. In states with established marijuana markets, such as Oregon and Washington, sales at retail outlets and dispensaries have declined from a year ago. In Colorado, sales in June were down almost 11% from a year ago. You saw a big spike in 2020. It was sustained in 2021. Between March and 20 and March in 2021, the monthly year-over-year sales were up 26% in Colorado. Now they're down 12%. In July, for example, people spent an average of $55 per visit. That was about $4 less from the average of $59. Now listen, I have plenty of friends, folks, okay, even in Florida. Now Florida, talk about this all the time. It's a racket in Florida, man. It's medicinal in Florida. But it's literally just a tax on you that you got to go to the doctor and pay the doctor, and then you got to pay the fee to get a marijuana card or something like that with the state, I believe. And you got to renew them every so often. I mean, what it really comes down to is literally a tax that probably a lot of poor people can't handle. So it's a real bummer when you have something that is only legal for the percentage of the population that can afford it. And if you can't afford it, they'll lock you up in jail if they catch you. That is not democracy, folks, to say the least, okay? It's basically should be legal recreationally the way they have it set up. And if it's legal recreationally, it's a plant, so you should be able to grow it, because all they're doing is just forcing you into somebody's pocket that's paying the government enough if you can't grow it. In Massachusetts, you can grow it, man. You know, it's recreational and you can be able to grow it. If it's recreational, you should be able to grow it, period. It's a plant. There's no reason you should have to pay anybody else. But to get to the point, prices, folks, are through the floor in terms of nothing, okay? If you're familiar with marijuana prices, an ounce of marijuana, which is a lot of marijuana, okay? Normally people are buying maybe 1/8 of an ounce. Now, an eighth, folks, used to be like $50 or something like that. 40 or $50 maybe is what an eighth used to be. I think it's like $15, right? You're getting ounces of marijuana for 120. It makes sense, folks. It's a plant. It is a race to the bottom. Anybody can grow it. Not surprising. And boy, some of these charts, man. Canopy down another % today. And you want to talk about a fall off. I mean, not as bad as Carvana, okay? But yeah, that's a one-way trip, and I don't know how that makes money. You know, I talk to my dad about this sometimes. Constellation, that's probably the play, man. This is a great company. They have Corona, they got Modelo, they got Kim Crawford Wines, among many others, and they also have a big stake in Canopy. That would allow them access to that industry. And look at how it's handled, man. Look at how Constellation is handled. Yeah, you're off a little bit this week, but you're basically chopping around at near highs for the year of 2022 as we come into 2023. And it is going to be somewhat like the liquor industry, right? It's like, what's the difference between Bud Light, Miller Lite, Coors Light, all those? What's the difference? Really, the difference is marketing, man. It's brand appeal. It's marketing. That's probably what's going to have to come into the cannabis industry. Hasn't really happened yet because of the weird legality of things, I imagine. But boy, you see those numbers, folks. And if you have anybody that you know that is a purchaser, a buyer, ask them. Because I'll tell you, that I ask people all over, whether it's in Florida, I got friends in Massachusetts, okay, prices are through the floor. Margins through the floor. Probably one of the best ways to make money in this industry is to sell the picks and the axes, yeah, in terms of the businesses that are geared towards it. According to analysis by the Marijuana Business Daily, so is that MBD, so much for Investors Business Daily, Marijuana Business Daily, combined medical and recreational cannabis sales could reach $33 billion by the year end, up from 27. Okay, but how much are they making on that, man? Because I just told you where prices are going, all right? Sales are projected to reach $52 billion by 2026. Long-term horizon extremely bright. Yeah, but they got quite a few bumps to get over, folks, to say the least. Be careful of those marijuana stocks. I don't know how you make money with where prices are. Stay tuned, folks. We got a lot to talk about still. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps negative by 5 points. Market catching a little bit of a bid from the open, but still in negative territory. Just taking a look at a Fibonacci basis in terms of the pullback we've had from the thrust lower this morning. And I'm going to kind of just take the lows that we had outside of that spike tail. Again, that was like a 1 minute spike. I'm taking the 2 bars that we had of 840 and 845. And where are we up to, folks? All we're up to is about the 382. So be careful in this market right now, trading at 39.61, negative by 5 points. Crude, 72.35 right now in that gold contract. Up by $7. We jump over to the dollar index. Currency is so important in this market right now. Dollar sitting at 104.87. And we jump to notes and bonds right now. A little bit of lower price and higher yield. Now, interesting, right? We take a look at the 3-year weekly. Even, let's just put it back on a daily, okay? We're in a critical area, man, in terms of where we are. The upper boundary of this channel line in the 10-year, you're going to get a rollover. You're going to get it right here, man. You break through this area, that would be a decisive break. We're at 114 and change. And, yeah, we will see where we go, man, because we might get some lower price, higher yield if this market really thinks the Fed needs to keep those rates higher for longer. Seems to be what's happening right now, folks, although the market not really reacting that way, only negative by 4 points. But remember, we're 30 points about where we were from where we were this morning, pushing about 39.90. Not sure why you traded that high in terms of being at 39.90 coming into that PPI number, but nonetheless, that's where we were. All right, folks, jumping around, what else we have going on? It's the Tiger Dollar Holiday Sale. It ends Monday. This is the last weekend, folks. Get over there and get some Tiger Dollars. You can get up to a 40% bonus on your purchase. If you're not familiar with Tiger Dollars, they can be used for any newsletter. They can be used for Basil's trading webinar, any webinar. Larry does some trading webinars throughout the year. I'm sure he's going to be doing some next year. I'm not sure. We don't have any on the agenda, but he loves doing them, folks. They're good for any newsletter, any service, any webinar we do at TFNN. They never expire. For you current subscribers out there to any newsletter, whether it's Basil's, the opening call, whether it's the Gold Report, Path of Least Resistance, Mastering Probability, Steve Rhodes, right? Rocket Equities and Options. Please, I encourage you, go get some Tiger Dollars. You apply them to your account. They're used automatically for every future transaction going forward until your balance reaches zero. You got nothing to do, man. You can buy them in 3 different options, whether you spend $500, you get $600. You spend $1,000, you get $1,300. That's a 30% bonus. You spend $1,500, you get an additional $600 free Tiger Dollars. You get $2,100. That's a 40% bonus. And they're in your account, and they're applied until they reach zero. And everybody's going to get a TFNN Tiger mug as well. Drinking water out of my Tiger mug today, folks. We don't even sell them. Exclusive. Beautiful little Tiger with TFNN.com, educating investors on the back. We'll ship those out as a thank you to everybody taking part in that sale. So please check it out. It's the last weekend, Friday, the weekend. We come back Monday. That's the last day. We're getting ready for that holiday season. And as I mentioned, folks, Basil Chapman, he's got a live trading webinar coming up. That's next Thursday. We get the Fed decision Wednesday afternoon. I'm sure that's going to provide some volatility. Usually the day after, you get the market still digesting the Fed decision and press conference. We also get retail sales that morning on Thursday at 8:30. We also get weekly jobless claims, continuous jobless claims, some nice economic data to kick off that Thursday, maybe providing some volatility. Basil's going to be in there from 8:30 till 2. So that's 5.5 hours. He'll have some breaks in the 5.5 hours. If you can't attend all 5.5 hours, it will be archived. Okay, but he's going to be live trading. He's going to have a focus on the S&P E-mini futures. E-mini futures. Nothing like the S&P, folks. That's what he's going to be focusing on. He's also going to be looking at potentially gold, crude oil, natural gas, some of the 3 times long short index and sector ETFs that many traders out there enjoy, some low price stocks, and then possibly consensus requests. He's also, now 5.5 hours, folks, he can't be clicking buy, sell every minute of those 5.5 hours. He's also going to be going over a number of the different methodologies that he uses when trading. I encourage you to click on the link, see the action he's going over, patterns and technical tools presented, okay? The cup and arch, the rectangles, bar symmetry. Basil talks a lot about the symmetry, man. I'm going to go back to Carvana because there is some symmetry on that Carvana chart back to zero. Certain technical tools available on all trading platforms that can assist you. Moving averages. Basil loves moving averages, whether it's the 3x3 displaced moving average. He'll talk about many of them. Chapman wave notation of peaks and troughs, the basics of what he uses, money management techniques, stops and buy stops, and he's going to go over a market overview, which stocks and sectors to look at as we come into the first quarter of 2023. Please check it out, folks. He's going to have exact trades in there, specific buys, specific sells, stops, etc. First time Basil's done a live trading webinar for us in, I think it's like 20 years that Basil's been doing his program and his newsletter, folks. He's an outstanding educator. So check those out on the front page of TFNN. Please, no matter what, go get some Tiger dollars, folks. If you're thinking of signing up for anything we do 2 of these a year. Usually the last one we did, I think, was July 4th. So you're talking about the next one we might do might be around July 4th. We usually do 2 a year. That ends Monday. And yeah, if you're thinking about signing up for Basil's class, the way to do it is go get some Tiger dollars and then use them to sign up for Basil's class, and you lock in added savings. And you get a month of his newsletter as well, folks. Basil's newsletter, that's $149 right away value. So if you're signed up for Basil's newsletter, check out the webinar because you automatically get a month of your newsletter applied. That's $149 value. The 5.5 hour class is $249. What is that? $146 you end up paying for a 5.5 hour class live with Basil as he's live trading with a focus on the E-mini S&P futures. That's going to be a great class, folks. The Tiger Dollar sale's a great deal as well. All right, let's check out some of the stocks that are moving this morning. We'll jump down the list. We got some companies with earnings yesterday. Is this market? Fighting. Just got into positive territory. We roll back over. Lululemon. Yeah, so much for their numbers. They had been performing somewhat well. You're down about 9%. Lulu, yeah, weaker than expected outlook. Not what you want to hear, man. Not what have you done for me lately. What have you done for me in the morning, in the future? Lulu reported better than expected profit and revenue for the latest quarter, but it saw a smaller than expected increase in comp sales, and they disappoint on the outlook. Not what you want to see. We jump to Costco with their numbers. Giving it up off about 1%. Strong company, Costco, man. We're members of Sam's. They get some great deals, man. If you're, in a time of inflation, man, you want to try and save some cash if you can. I encourage you to check out some of those big box retailer in terms of the wholesale companies like Costco. They missed estimates on both the top and the bottom line. As inflation hit consumers, cut back on spending, they saw increased operating expenses, but down 1%. Yeah, we got Broadcom numbers this morning. AVGO up 3.5% for Broadcom. Better than expected quarterly results and an upbeat outlook. Yeah. Now, Netflix, this one's an interesting one. So they get a couple positive reports out there. Wells Fargo upgraded their service to overweight, saying content growth would lessen customer churn. And Cohen out there named it the best idea for 2023, pointing to additional monetization avenues, including new ad-supported tier. Now, Netflix has struggled, to put it lightly, recently. You're catching a little bit of a lift this morning, down from 700 to 162 on a Fibonacci basis, folks, okay? You put this there, the 382 could bring you all the way to 373 on this equity, and that would be kind of where you chopped around in the beginning of the year on Netflix right now. Let's see how Disney's trading right now this morning as well. Disney up about 0.4%. Disney near the doldrums of the lows, man, at $93. Stay tuned, folks. S&P's negative by 7. We got one more segment of the program. Come on back.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps negative by 10 points right now, trading at 39.56. Where did we get to, folks? Where did we get to? We got right to the 618, man, trading to 39.71. From that kind of lower area, we were at it about 840, and since then we've rolled over a bit with all the markets in negative territory. Crude, a little bit of a bid from where we were this morning, up by 88 pennies, 72.34. We were low in the 71s right after that number, but catching a little bit of a bid as crude continues with the volatility this morning, and gold up at about 18.09. Let's see how the dollar's trading right now. Volatility everywhere in this market. Dollar right near about 105 right now. You jump over to the dollar yen. Dollar yen right now, yeah, about 136.42. A little bit of a weakness in that dollar yen. All right, let's check out some of the FANG stocks, how they're trading this morning. Amazon down about 1% right now. Apple, there you go, off about 0.2%, 141. We jump over to Microsoft shares. Yeah, negative action, man, down about 0.75%. Tesla catches a little bit of a lift, up 2.2%, but be careful of this one, man. Seems like Elon's a little bit distracted. Now, the one thing I will say is, where have you pulled back to? 618, folks. 618 in the entire move higher from COVID. $25 to 415, and just like that, you're back to the 618. Also kind of the area near the consolidation that you had for the lows of 2021. Maybe you could find a bid there. Maybe. At least if you're buying it, you could have your back against the wall in terms of your trading the 618. Trades below that level. You put your stop somewhere below that level. Yeah, we'll see, to say the least. As this market rolling over a little bit, man, just make sure you're able to handle a potential pullback if you get one, folks. That's what I would say. Because, you put this thing, let me take off some of this for some clarity. Now, this is a super long-term, right, chart. But since 2008, folks, okay, not exactly what market decimation looks like, okay? Now, I've said this before. We got 30 seconds left. Well, folks, this is November 2016 when President Trump was elected. Do you remember how well things seem to be going? The market was at 2,200. It's currently sitting at 4,000. Okay? Keep that in mind. We still could have some ways to go if things really get dicey to the downside. Thanks so much for starting your Friday off, folks. Check out the Tiger Dollar sale, man. We got one more day. That ends on Monday. Have a great weekend, everybody. Stay tuned. Our man Basil's up next, and check out his live trading webinar next Thursday. Have a great one, folks.